Today's episode of Market Talk is brought to you by GrowMark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And taking a look at Thursday's market action, a little support in corn and wheat, beans down a bit, livestock lower, rough day in the stock market, though. Overall, got plenty of interesting things to tackle and talk about here on the show today. Joining us with market analysis, we welcome in our good friend Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, good to talk with you, sir. Hope you're doing well so far this week.
Jesse, doing great. Thank you for asking. Yeah, maybe a little better than the stock market the last couple of sessions here after posting some really impressive gains a couple of days ago. There's different indexes you can look at. When I look at the Dow Jones index, just over 35,000 here in the 13th. Well, today's the 15th. Right now, we're getting closer to 33,000. So pretty hard turnaround. A lot of activity with the Fed raising rates again. So raised them, but they seem to imply that they feel good about where they're tackling inflation, but there's work to be done. I guess I'll paraphrase a little bit there. And then export sales for corn, soybeans today, wheat, they were pretty good. Beans had a big number there, and the bean market was a little bit defensive today as meal and oil took a bit of a slide, anticipating that maybe these export numbers were already in place. Corn had a nice pickup this week, 37.8 million bushels. We've been seeing numbers consistently below that. Corn ended the day with some small gains.
Yeah, overall, you hit on a few different things that I want to tackle here, Bryan. I want to stick with the Dow Jones and the outside markets at the Fed here real quick. Feels like that's been the backdrop to these markets all week long. But looking at a rough day here on Thursday, I wonder, though, how much did it play into the commodities? It felt like grains and livestock held up okay, considering the big down move in the Dow. And, of course, you mentioned, more work to be done, so to speak, from the Fed. That's what they say, kind of hawkish comments again. It just seems like it sets us up for more of this to continue as we enter into 2023, Bryan.
It does, and a lot of volatility and a lot of back and forth. And so some might question, well, where do people put their money, or where do these hedge funds go with their money? The stock market made a very solid recovery from about just a little over 28,500 to 35,000, and it did that in a window of time really about the same window of time that the corn market took about a 50 to 60 cent slide. And so it looked like the fund money or managed money was maybe moving out of commodities as a whole and moving into equities. And now what? Do they buy the dip in equities, or did equities overextend themselves? And so we'll see. The other thing you have is you got end of the year approaching. It's a couple of weeks ago. There at some point here, it wouldn't surprise me if traders just kind of said, we're kind of done for the year. It's been so volatile and jumpy that we're just going to move to the sidelines. There might be some of that too, but in the corn market, the bean market, it's always active. It's always dynamic. There's always a weather market somewhere or potential for one elsewhere in the world, which brings me to the point of focus. The market will keep an eye on what happens in Argentina and Brazil in particular, and see what that looks like for crop production prospects.
Well, in this soybean market, it feels like, and I'll say that it again feels like, I want your perspective on this and your thought, but we keep bumping up against this overhead resistance level, $14.90, $14.95, $15 here, and then we take profits, and then we kind of churn our way back towards it. That's what feels like is the cap right now on this soybean market. And you mentioned the strong export sales for the week again. Looking at South American weather, is this just overhead technical resistance, or is there something else underlying that we need to keep an eye on here in this soybean complex, Brian?
Actually, it's several factors. It is overhead chart resistance. To your point, near $15. We've reached that level multiple times here over the last several months. Run out of gas, so the trade's pretty quick to sell it. If it's not blowing through there, they'll quickly sell it. Export sales 108 million bushels today. That's awesome. Brings total 1.536 billion. That's ahead of last year at this pace, 1.471. There is weather providing support in Argentina and Brazil. The question is that weather market going to expand, or is it going to be kind of pushed to the sideline if conditions improve, with a waning La Nina forecast, according to longer range forecasters? So you've got all those dynamics, and then you've got the dynamic of China opening up, and yet COVID spikes, but still signaling that they're going to take measures to try and sort of bolster the economy, which has really had a rough year in China. So all of those factors, but suffice to say, the bean market running up against 15, it's a high price. You've got farmers that are kind of looking at things pretty closely, going, we've been here before. I don't want to lose this. And that is kind of, I think, a determining factor. As I talk to producers, if they've been looking for an opportunity to sell beans at $15, it has come and went several times since June. And when it goes kind of quickly. So I think the idea of, look, I don't want to get too greedy, not really seeing big problems in Brazil with weather. I think I better sell some beans. I think there's some of that as well as farmers delivering corn on good basis where it's needed and wanted. And to date, the slow export pace for corn. So really kind of the same story we've been talking about. But what happens is you get what's called a trader's market. Traders buy the dips or buy support. They sell resistance, and others would call that base building, where the market it can't break out one way or the other. And that's really the trend we're probably in with soybeans. It's about $1.50 range, and in corn, it's a big 50-cent range.
Brian, an interesting thought popped in my head. I'd love your opinion on this. We talk about some of those things you mentioned, a trader's market, and we look at soybeans, farmers who wanted to sell, $15, and that's come and gone quickly. We get into the holidays, get into a lower volume type of trade. Sometimes it can get a little more volatile with low volume trade. Is this maybe a spot where producers look at putting in some of those quote unquote wish orders? I don't know what else to call it. Say they want to throw out there a $15, mark sell stop and whatnot. And if we hit it, then they're good. Right. If not, okay. I mean, is this something that could be looked at here in this type of holiday trading environment?
It sure is. And that's one of the things that, so a lot of times I'll have a tendency to be somewhat conversational with producers, kind of talk about what's important to them, their goals. And I'll often hear them say, hey, if I could just get X, I would do something with my crop or some bushels. And so, I'll kind of push them a little bit. Well, if that's what you want, get it out there. I'm not saying you would have done this if somebody would have, but if you look at the stock market the other day, if somebody had said, geez, if we could only get back to 35,000, I would, move out of my portfolio and go to the sidelines. Well, it was there for about 10 minutes, it seemed like, and now we're 2,000 points difference, or 2 divided by 35, whatever that is. But let's see, that's about 5.7% lower in 2 days. So the point of it is, get those orders out there. We're not going to run out of supply. We have limited supply, but to really kind of get that upward momentum to really build, it seems like we're going to have to connect some favorable dots. You're going to have some weather concerns. You're going to have some good continued demand of either exports or just disappearance. And what we're really looking at is, when you look at export sales, they're 4.4% ahead of last year. They're moving as expected. There isn't anything there. They're a little better than last year at this time, but there isn't anything there that's turning, $15 beans into $16 beans. It's not happening. So make sure and get those orders up there and get them triggered let them get triggered if the market trips up there.
And I think all of that is part of, and you and I have talked about this before, a proper, good, strong risk management plan. Especially this time of year, farmers are assessing things. They're looking here at the books ahead of the year end. They're preparing more for 23. They're maybe even looking at some 23 sales on new crop already too. It's all about putting together that proper risk management plan, isn't it, Brian?
Well, it is. So there's a couple of facets to that a strategy or plan, and that is managing risk, but also managing opportunities. And opportunities come in the form of selling into the rally, selling value. So I'm a big proponent on sell early, sell often in the new crop, because often the market puts some sort of weather premium or carry into price. Now, there's no carry. December corn at 598 is well below March corn at 653. And in beans, 1388 November beans is well below 1476 in March. But if we look at pure value, and if we said, okay, if we sold some $14 board beans or hedged to rye or what have you, and sold some $6 corn, what is our fear? Our fear is that the market just all of a sudden takes off and goes. Well, if we're selling some, that's we want to kind of have that fear ignited a little bit, because that's the only way we can sell more higher and build an average price higher. But at least by getting some things sold, those sales, should prices not move up much from there, but move lower over time, act as a pulley. So it's really about managing the risk and managing the opportunities.
Bryan Doherty, Senior Market Advisor at Total Farm Marketing, is our guest analyst here today on the show. Bryan, let's move over to livestock. Livestock trade down Thursday. We got a rebound from the previous week in the weekly export sales, but still just traded lower. I wonder if that had something to do with the stock market going lower, maybe kind of going lower in conjunction with the stock trade, Bryan?
I think it did. It's hard to say. The cattle, the hogs, they've been pretty volatile lately, and I'm just going to give you sort of the quick history of February cattle. So in September, 155, the September 21st, down to 149.60 by September 29th. So straight down, and then straight up, and by October 27th at 156. So picked up close to $7, and then straight down within 2 weeks, or less than 2 weeks, 152 area, and then right back up to 157, chopping. Last week we were down to 152.75, quickly rallied up to 156.75, so a $4 move, and now taking back some of that. You kind of take away all that music, and we've been kind of stuck around this 154. We can go back to July and be either side of that. So I'd say the market is stable, but between inflation and worries about the consumer not being able to really afford higher price cuts, the trend, you can argue, is steady to higher or steady. But I think you've got this kind of just this whole, like today in the stock market, it just, anybody looks at that, and they go to the grocery store and they're like, ugh, how bad did my 401k get beat up today? Maybe we'll go to the chicken.
Mm-hmm. Great point. Great point. Well, and I think with cattle too, cash cattle trade's been really slow to start here this week. I wonder if part of that's also getting to the holidays. Maybe some of it, especially in the north, the winter storm, maybe having an effect there on some feedlots. But this cash trade, and just looking at the supply of cattle, it seems like everyone I talk to is fairly bullish with supply coming down. Yet, one has to wonder, or have we reached a top maybe in cattle? I guess these are just some things that have been running around my head as I have conversations with ranchers and analysts here as we head towards the beginning of 2023. Is, has this cattle market run out of steam, or does it have more room to run, Bryan?
It's got more room to run. I think in the supply side, it'll be tough to keep cattle prices down unless demand completely falters. I've talked about China and some poor economic conditions. They're doing some things to maybe shore up their economy, and so we're hopeful there's a good export market there. Long term, there's just a supply issue, I think, in the cattle industry, and so you're going to need these higher prices in order to build a herd. You're going to need some cheaper corn, and right now we don't have cheap corn, and we still got droughty conditions all over the map, and it's just hard to come to any kind of conclusion that we've got the supply. The world is, well, increasing slowly. It's still increasing population every year.
Mm-hmm.
And I just shudder to think, we talked about this before, that if supplies get too tight, the packers may not work Saturdays, or maybe it's a 4-day week. So I think there's a real supply pinch on the horizon. We talked about the cows and heifers that have been pulled ahead. The feedlots got kind of full. Weight gain was pretty good this fall, but things would get pretty tight. And that's one other issue that we really haven't addressed is winter weather and kind of this back and forth temperature that we've seen here over the last couple of weeks. In some areas, it's not been very good for weight gain for cattle.
That's a good thing to keep in mind for sure. Bryan, how about that dairy market? What do you see in there today?
Today we saw some price rebound, not a lot, 7 to 20 higher, let's call it. Struggling to really hang on to $20 milk in the front months and barely getting over $20 in the back months. And we're going back a long time historically, but that $20 milk's pretty solid. Now this last year when it's 25, 20 doesn't look so good, and a lot of farmers that sold at 20 disappointed they did so, but I think that was last year. Production up a little bit, efficiency up. I don't know. I wonder if there was. I'm going to say there's profits made in the dairy industry. So when there's profits, people try and produce a little bit more, and now it's getting back to being kind of sticky again. But I don't think we have the momentum to carry us much above 21 and a half or $22. That's just me at my best guess, because to get to that 24, 25, usually it's something extraordinary. It's a lot of other markets. It's a commodity complex moving up, and I don't see that right now.
Well, Bryan, great thoughts as always. Any other final thoughts or anything you want to reiterate for us before we wrap it up for today?
I'll focus back on, you talked about your wish orders. Think about what that might look like to you if you could get 25 cents on corn or 50 cents on beans, something that comes kind of quick. Keep rewarding the market. The old saying is nobody went broke selling at a profit. I worry that everything that was kind of friendly and bullish to the markets the last couple of years could be dissipating or turned the other way. And then it's tough to find anything. Even bullish news is viewed as bearish news. So you get the rallies and they run out of steam. I only say that from a long career of working in the markets, that when the dynamics sort of shift and you have high markets and you have tight fundamentals, at some point you got to have people willing to pay at a higher price. And if the momentum isn't there, they don't. And then the market drifts. And if you get something negative. So be mindful of selling rallies. Lightening the load, know your marketing tools.
Definitely. Well, folks want to reach out to you and have a conversation about some of their marketing tools and just talk about what their plan looks like. What's the best way to get a hold of you, Bryan?
The best way is 800-334-9779. Again, Bryan Doherty, Total Farm Marketing, 800-334-9779, or our website, totalfarmmarketing.com.
Always a pleasure, Bryan. Thanks for the time and the insight. Have a great weekend, sir, and we will talk to you next week.
Thank you, Jesse. Much appreciate it. Bye-bye.
Bryan Doherty with Total Farm Marketing, our guest today. That's going to do it for the show. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.